So why Bitcoin? Bitcoin is the best form of money that we have, and it's outperforming the blue line, which is S&P 500, and the yellow line at the bottom, which is gold. So it's definitely important for every country to have Bitcoin because there is a large potential for Bitcoin to grow. It's effectively an asymmetric bet. So this is my projection. I'm using 60% median annual growth for Bitcoin price appreciation. And I don't know if you can read the chart, but in 10 years' time, we should be at $7 million per coin. So this is a conservative projection, and I think it's probably going to be higher than this. But if this is what comes to pass, then I think you should have some Bitcoin. So this is just comparing two models. The orange line is my model, 60% median growth. The blue line is Saylor's Bitcoin 24 model, but I think he's underestimating the growth potential. So there is also a inflow to market cap relationship between money that's coming into Bitcoin and the price appreciation. So in 2021, the Bank of America extrapolated that $93 million of inflows would be required to increase the market, the Bitcoin price by 1%. And if you work backwards, which some people did, it comes out to 118 times multiplier. So $1 increases market cap by $118. And it goes to show that the potential to increase is much lower for Bitcoin than it is for gold or treasuries. But I think that is a bit high. I think it might be more conservative to estimate with a 20x multiplier. But there is a multiplier, and that's the main point. Basically, if you wanted to buy 245,000 Bitcoin, the market cap you'll add 15 billion, but you'll increase market cap by 300 billion. So the point of this is that to buy back the Bitcoin that was sold is going to be more and more difficult, especially with competition to other countries that are mining or buying Bitcoin. Well, my model is actually very simple. It's just 60% median growth every year. And if you go back 5 to 10 years, roughly you see the same trajectory. But one thing that most models don't account for is that there will be a point at which people just stop using fiat currencies. So we can project out 10 years, 20 years, but the reality is we're probably not going to go to 20 million a coin. And eventually at some point, we'll just use Bitcoin as the unit of account. So with money, you have three parts of paths to evolution: store of value, unit of account, medium of exchange. So unit of account right now is still the dollar. Even countries that don't use the dollar, their currencies are pseudo-pegged to the dollar or directly pegged to the dollar. But eventually we'll just price things in Satoshis, which is the smallest unit of Bitcoin. Well, I think ultimately everyone is going to use Bitcoin. It's either you accept it or you wait until you have no choice, because the person you want to buy bread from doesn't want a euro anymore. So at that point, do the regulations really matter? It's just near term. I think you can have good regulations or bad regulations, but the legal tender law I don't think is really legal tender even in El Salvador, because merchants are not forced to accept it. Larger companies are accepting it because they want to make sure they follow the letter of the law. But by and large, most people don't accept Bitcoin yet in El Salvador even, and they're not forced to. So if I go to a business and I say I want to pay in Bitcoin, they say no, I can't call the police. I don't think anyone's going to enforce that. And I think the deregulation path of Argentina is probably more practical, just saying just use whatever you want. And you can use Bitcoin as money, and there is no barrier there. There's no taxation on it, because you shouldn't be taxed on using money to buy daily goods. And I think places like Switzerland are okay as well, because there is no capital gains tax. So you can, for example, in Lugano, just spend Bitcoin and buy whatever you want, and it's just treated as money too. And there was no regulation needed for that as well. So I guess it depends really on if there is anything currently prohibiting, because some countries don't allow people to use Bitcoin for payments as well. So either you need to amend that or make a new regulation saying, yes, Bitcoin can be used. So it's very different per country, but I think the countries that we are focused on are more in the developing world, and they are seeking economic growth and investment. So for them, it's not really worrying about all these things that maybe Europeans worry about, but they just want money to come in. And if Bitcoin is an avenue for that, then they will welcome that.
Right now we see the nation states issue a lot of debt and they just consume it, right? They put it into consumption, like social security, give it to people, whatever. Have you actually had in your encounters with different governments, like literally like told them, hey, why don't you just, you're issuing your debt anyway, you could easily buy an asset with it, and that asset goes in your books, and you could still use that as a collateral to issue essentially the same amount of debt that you had before, but now you also have the asset. Is that something that people are receptive for? Do they get it, or do they think like, wait, that's like, how can we?
I don't think they get it yet. So when I speak about Bitcoin bonds, it's just, issue the debt and buy Bitcoin, not to leverage the Bitcoin to do anything with it. I think that's more sophisticated, and that's probably more in the realm of Michael Saylor and his clever financial engineering. But I think if a country did issue debt to buy Bitcoin and just held it, that is already good enough, and that could eliminate most of their debt. At least that was the idea for El Salvador. In a world where everyone is transacting in Bitcoin directly, would anyone want that fractional backed currency, or would they be forced to use it, which is also the case too with a lot of fiat currencies too. I just don't see it surviving in the long run. I guess it has to do with human motivation. Like, which government in the world doesn't want something that's valuable? I remember seeing a comic book or comic strip. It was this elf or something that has he's collecting bottle caps, and then the taxman goes to him and said, "You pay your taxes," and he says, "I don't use your money, I have bottle caps." And then the taxman says, he pauses, and then he says, "Give me those bottle caps." So if Bitcoin is valuable, states are going to want it one way or another. And right now, as you saw, the bulk of the holdings are from seizures, from criminal activities. But in the future, that could change to mining, because if you look at it, at least the way I look at it, is a state is basically, they're the homeowner association. They operate the land and they have all the energy, and they can direct that to do different things, like mining Bitcoin, so they could mine it for themselves. And we already see that there is a potential for Bitcoin mining to balance grids. And if you're going to nuclear, you have a very large base load already that you need to consume. So why not mine Bitcoin with it? So eventually, there is no such thing as a mining company. It's just an energy company, and they all mine. And if they all mine, then and they're state-owned, then the state can produce its own Bitcoin. But I think the key is that we are engaging to make sure that if there are policies that come out, it's not bad policies, and there are protections in place to ordinary Bitcoin holders, rather than letting policies go unchecked. Like we talked about the self-custody and those issues there. If there was no pushback, that could have gone through. So it's just a question of, if you think engagement and intervention is a net good or a net negative, but I think it's a net good, because education is never bad one way or another.